Well, yet another quarter of strong performance by HDFC Life. Now, taking a look at the kind of results that the company has posted, if I look at the PAT, it witnessed a growth of about 5.6% on a YY basis, while at the same time, gross written premium witnessed an uptick of 34.5% on a YY basis. This definitely indicates that the entire business is seeing good amount of uptick as far as performance is concerned on a sequential basis also. In fact, in Q1 of FY21, the business did witness an impact of the COVID-19 led lockdown. But having said that, as economy is opening up, things seem to be stabilizing and improving for the life insurance companies and also in particular HDFC Life. Now, value for new business grew by almost 22% on a YY basis for Q2, but definitely is something which the company has always been targeting. In fact, the company has mentioned and the management has mentioned that a 20 to 25% growth in VNB is something that is doable. While the new business margins also expanded coming in at about 25.6% versus 24.3% compared to what it was in the previous quarter. Well, apart from it, the other critical parameters, the individual APE witnessed a degrowth of 4%, while the total APE witnessed a degrowth of 4%. Now, in our interaction with the management, they did say that Vibha Padalkar particularly mentioned that this would also see and normalize in a month's time. So, APE is expected to come back on the positive growth trajectory within 1 month time period. Well, protection business continued to display strong growth as far as the overall business is concerned, showing an uptick of about 38% on a YY basis. In fact, interestingly and equally good growth was witnessed in the annuity business also. But having said that, protection business continues to be a focus area, given it's also a margin accretive business for the life insurance companies. Well, its total share improved from 6% to 9% as part of the total product mix. Well, renewal premium, which was a function of the persistency, also witnessed an uptick of about 22%, indicating that things seem to be normalizing and collections are improving on a month-on-month basis. And this definitely did go down well as far as the HDFC Life is concerned. Well, the management also said that in the previous quarter that the cash conservation requirement was predominantly high during that April to June quarter. However, things as economy is opening up, things have definitely witnessed an uptick. Well, talking about the key ratios, net new business margins, like I mentioned, did see an improvement even in first half of FY21, standing at about 25.1% versus 27.5% on a YY basis. Well, Vibha Padalkar also mentioned that opening up of the economy has led to a pickup in activity levels on ground. This has resulted in a marginal uplift in the household incomes and spends. In fact, she also mentioned that insurance is coming and emerging as a stronger as vehicle to protect one's family and also realize the long-term financial goals. Well, the customers are more active when it comes to their decision making. Their individual WRP market share increased by almost 235 basis points to 17.5%, and the company and the management is pretty much cautiously optimistic of the kind of outlook that is in store for them. Given that COVID is still an uncertainty, they are optimistic, but at the same time, they continue to remain cautious on the future growth levels.